Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Alex, who is Chief Market Analyst at Amana Capital. How are you today, Alex?
Very good, and you?
Very well, thank you. Right, let's talk all things euro and what are the key drivers behind this euro appreciation, certainly the euro appreciation we've seen against the dollar recently. What's moving the euro?
I think primarily is strengthening in the Chinese currency, the Chinese yuan. I'm going to show you guys a chart on that. But we're also going to investigate some of the key drivers that people look at. A third thing that people talk about a lot is just that we're seeing a lot of flows into European equity markets. Because with the US stock markets being relatively overvalued, at least from a fundamental point of view, or more highly valued compared with the European ones. I think the theme, at least for the last 6 to 9 months, has been, buy European shares, just because Europe is seeing growth now. And that is an explanation as well that can explain why the euro is trading at these levels.
Understood. And we're looking here at the euro dollar versus the euro swap on the 2-year and the US dollar swap. A lot of divergence. What's going on here?
Yeah, so this is the kind of the model that most investment banks use. Like pretty much all the big guys look at this. So it's the 2-year swap yield in the Eurozone versus the 2-year swap yield in the US. And historically, over many years, you have a very, very tight correlation here. And the rule is very simple. You go where the interest rates are the highest. Imagine you have 100,000 to invest. If you can put your money at HSBC, you get 2%. And if you get 3% at Barclays, you're probably going to put your money at Barclays, given that the risk and everything else is the same.
But the interest rates in Europe are incredibly low.
Exactly.
So why this inflow of, or why are people buying the euro?
I think the reason, of course, why they're buying the euro is because now they're seeing that they're going to ease on their quantitative easing, so reduce that, and maybe at one point raise interest rates. Now, when we look at these 2-year swap yields, what makes them interesting is that it's not a market that is available for the man on the street. It's mainly the big banks. So I would call this like a smart money index. And if we look at the chart here, you can see a quite big divergence between these two. And it tells me that the institutional side, they're not buying into the current rise in the euro. And that eventually we will have some sort of convergence.
And will that convergence come from a sell-off in the euro or an increase in the dollar? How is this graph, this chart going to converge, do you think?
I think eventually it will lead, it's going to be a combination. Again, it could be like a disappointment, or as soon as the ECB, maybe gets rid of their quantitative easing, maybe people will realize they're still going to take some years until they raise interest rates. And at the other hand, in the US, as we discussed here in the past, they're not doing great at all now. And now with, Hurricane Irma and Hurricane Harvey, it's going to be bad. But then eventually they need to rebuild everything. So most likely we're going to have strong growth. And then again, we see a bit of a boost to the dollar. Now, these things are not like holy grails, right? Here right now, like a lot of people, they were telling us that the euro was going to trade below, trade to parity, right? I was one of them as well. Why? Because you can take the correlation between the swap yields, and then you just imagine, okay, so what if the US increases interest rates, to 2.5%, 3%, and what if the interest rates remain at 0? Then that swap yield is going to be substantially lower, and because of the correlations, the euro dollar should be at 90. I think Deutsche Bank had a target at 0.90. And it's because of this. And this model has not clearly broken down. And it could be like that for a year or two, but eventually I think things will converge back. And we can look at this once in a while. That's what I do. But then ultimately, if you actually deciding to take a position on this, it's better just to focus on the technicals and what's happening at the time if we see some sort of reversal. And then if we indeed get some sort of reversal, then we can use these levels as some sort of a target, some sort of a fair value or fundamental long-term value.
And albeit the convergence may take a couple of years to play through, do you think we could see further divergence? I mean, a bigger gap on this chart going forward?
I think so. I mean, there are other things that are driving it's not just about this, right? So we have another chart for you, which is the difference between the German and the
US 10-year.
Yeah. And here you can see, it might be a little bit hard at home to see what you're looking at, but the sharp rising line is the euro, and then you have the differential in the US 10-year Treasury or government bond yield versus the German one. And you can see here they have a slightly tighter correlation. And then I think really the third and last chart explains the best really. And here you're looking at, again, the euro, and this is the Chinese currency. Now the way I prepared this chart is that when this red line goes up higher, the Chinese currency is strengthening. So maybe it's like, obviously the Chinese control their own currency. And then obviously we've seen the Chinese economy maybe bottom out a bit, but then again we've seen that political pressure from, for example, Donald Trump, that the Chinese currency is just too weak at one point. And we can clearly see here that over this chart at least, the Chinese currency has been gaining. So I think maybe what's happening here is that people are selling dollars and buying Chinese currency, the Chinese currency, and that, because it's such a big part, like the Chinese currency, is influencing the euro.
So if you're seeing an appreciation in the renminbi and the yuan, the read across is that that's strengthening the euro as well. And do you think that's because the euro is an exporter to China and that is helping?
It's just a normal correlation. Usually, like in all the major currency pairs, you have like the pound dollar, you got the euro dollar, you got the dollar yen, and you got the dollar CAD and Aussie dollar and the New Zealand dollar. So everything is always compared against the dollar, right? So I definitely think that if this is quite a strong rise in the Chinese currency, so I think definitely it's more engineered maybe by, say, the Chinese. So for them to actually strengthen their own currencies, they need to buy their own currency and they need to sell the dollar. So if they're doing this on a daily basis, like slowly selling and selling and selling dollars, then I do think it influences the valuation in the other currencies. And then of course we have like a feedback loop. So it's hard to say exactly where everything starts, but we can see at least that looking at the charts we have fairly nice correlation. So how can people use this information? Well, they can look at the Chinese currency by itself and just compare, like, are we seeing signs of a reversal in the Chinese currency? Then that could highlight or suggest that maybe we're going to see high in the euro dollar. Obviously, again, it just explains one part of the story, but I think it's an important one. In that, the currency itself, a lot of people, they use quantitative models that use sophisticated hedge funds and things like that. They usually look at things like this, and they just put these different variables into different models, and then they use them until they break, really. And this is one of these that I use myself as well in my quantitative stuff.
Fantastic. So if you are trading euro dollar, this may be a pre-indicator of when the high is, and if we see a sell-off. The Chinese currency, that may be a precursor to a sell-off in euro dollar. So even though you may not be trading the Chinese currency, this is an indicator to look at. And obviously if the smart money, the quantitative funds are trading that way, that is a trade that could be set up when we see that fall off.
Yeah, definitely.
So certainly for our viewers and traders in euro dollar, have the Chinese currency on your radar. If you see a sell-off against the dollar, be aware.
Yeah, definitely. That's exactly.
Fantastic. Well, that's very insightful. Thank you so much for bringing all your knowledge today, Alex. It's been a pleasure.
Thank you for having me.